Welcome back to video 3 of part 3, and in this we're going to talk about what is a pip, why this matters, and then talk about a few other components. But when we're done with this video, everything is going to be wrapped up in terms of you having a good foundation of what's going on with all these different Forex lingos and quotes and all that sort of stuff, and then we can move into broker selection. But let's first start with pip. Now this is potentially, and if I was willing to bet, probably one of the first pieces of terminology that you heard about in regards to Forex. Maybe I'm just saying that because for me that was the case, and I'll be honest, I assume that the Forex market wasn't real. I don't know, I just had a real goofy sense because a pip, who calls anything a pip? But what if I'm being real honest, what came to mind was my little image over here. So I'm kind of revealing my age, but pip my ride, that's what I thought of, because there was the famous, I'm not going to explain it. All I'll say is that if you were around kind of when I was around, and if we're around the same age, I'm sure you know exactly what I'm talking about. Maybe they still play reruns on TV. I'm not going to say it was like a famous show or anything, because that's definitely not the truth, but it was pretty popular, pretty entertaining. So who knows, maybe on MTV they still play reruns of it. But that's always what I thought about, pip my ride. But I assure you, pips have nothing to do with making cars all fancy and all that. But let's just talk about, I want to talk more about that show because all these memories are coming back, but you don't care about that. The other term, though, that you may have heard is pipette. So we'll both knock out pip and pipettes. So at its core, a pip, very goofy sounding, at least in my mind, but it's just simply a unit of measure. But instead of measuring some sort of physical distance like you would with inches or meters or feet or any of that, we as traders, what do we care about? Well, we care about a numerical distance. Specifically, what is the distance the exchange rate has changed? What is the distance the exchange rate has traveled? And in order to get that distance, we need some sort of measurement. And in our case, again, our measurement is a pip. So let's talk about real estate again and location number 4. This is why I said way back when to please watch the videos in order. If you've done that, then hopefully the number 4 has already been in your mind of, okay, what does this 4 have to do with anything? Well, location number 4 is now where pips come into play. So looking down here at, the quote that we've been using through all the examples, we have, once again, our bid versus the ask. And, let's just count it out. I fully give you credit that you'd be able to do this, but let's just make sure. So we have first real estate location, second, third, number 4. That's where a pip comes to play. Over here, 1, 2, 3, and then once again, number 4. That's where the pip comes to play. So a pip is all revolving around real estate location number 4. As far as the pipette, that is just real estate location number 5. I'm not going to call them worthless because they're not worthless, but the main thing that, most lingo is going to be used and what most Forex traders are going to talk is in terms of pips. But a pipette is just location number 5. So like I said, I'm not going to count those out again. I'll assume that you can count out 5 locations. So there's a pipette. And then again, real estate location number 5, there is another pipette. So pipette, 5 real estate locations. Pip is the 4th real estate location. But still, okay, so what does this have to do with anything? Well, again, in your mind, we need to think about it as a unit of measure. What distance, what numerical distance has the exchange rate actually changed? Let's now assume, assign, I should say, some numerical values to some exchange rates. But before we do that, let's just first start off with a quiz question, and that will lead us into our example here. So friendly reminder, after you buy, you care about the bid value. Again, after you buy, you care about the bid value. Why is that the case? Well, hope you're saying, well, after I buy, then what I want to do at some point is sell. So in order to sell, what do I need? Well, I need buyers myself, because if I want to, unload the trade, if I want to exit the trade, then I need people to buy from me. So where are the buyers located at? Well, hey, the buyers are located on the bid. Therefore, that is going to be, the likely or the highly likely area where I can exit out of the trade to sell. So let's just say that you buy the US or the euro dollar for 1.02571. So what number do you care about? Well, we've been going with that number 4. I've kind of hopefully given you a hint by making it a different color. So let's just say that 3 hours later, the bid value shows that level. Now, why do we care about the bid value? Well, I want to illustrate, there are those 2 numbers. Hopefully you're thinking, yes, I realize that, Clay. I watched the quote video. But remember, after you buy, there's essentially only one number that you now care about. Yeah, there's 2 at the get-go, But after you have already bought, well, then you just care about the bid, because the bid is telling you of what you can exit the trade for, what value. So that's why we're focused on the bid and no longer even caring about the offer, because you're already in the trade. So at that point, this is the only value that you care about. So anyways, back to the numbers here. So 3 hours later, like I said, the bid value now shows 1.02531. So the question here is, did pips, or did I should say, did the pip value, did the direction of the pips go up or down? So I'll let you pause that. Welcome back if you pause. I'm not trying to insult your intelligence, but if your answer was, well, Clay, you said real estate location number 4, which is right there. And, last time I was in math class, 7 was more than 3. So because it went from 7 to 3, then pips went down in direction. Bravo. Well done. Exactly. You're already understanding pips. So yes, and the first question here, the pips went down in direction. Second question, what distance did the pip measure? So if you paused, welcome back. What distance? Well, again, I'm not trying to insult anybody's intelligence, but if it went from 7 down to 3, then you would say that, this exchange rate, it dropped 4 pips. It went down 4 pips. If you want to sound cool, like I said, I should have probably brought out that nerdy guy, but if you want to sound cool in front of your buddies, you'd say, yeah, the exchange rate, it went down 4 pips. And because you bought, in this case, you would then say, well, I lost 4 pips on it, because I bought when it was at 7 right here, real estate location number 4. But by the time I exited the trade, I had to sell for that. So therefore, I lost 4 pips on the trade. So yeah, if you got both those questions, fantastic. Like I said, I never claimed that pips was some sort of complicated, complicated topic here. I just want to make sure that everybody does understand it. But let's go on with the example. So you buy again the euro dollar, but this time you are buying it for 1.02711. So right here, 3 minutes later, the bid value, again, because that's what you're going to care about because you bought again, the bid value shows 1.02791. So once again, those same 2 questions. First part, did the pips go up or down in direction? So I'll give you a moment to pause if you want. Okay, welcome back. Hopefully you're saying, oh, brother. I mean, come on, Clay. I'm not a child. Well, let's just humor me, okay? So you're saying, well, the real estate location number 4, that was 1. Real estate location is now in number 4 at 9. So in this case, the pips went up in value. Correct. Next question. By what distance did the pips go up? So what distance did the pips measure? I'll give you a second to pause. All right, welcome back. I'm sure everybody had to get out their calculators for this one because we have a complicated calculation here, but let's see. It was at 1. So it went up to 9, so 9 minus 1. Hey, it went up 8 pips. So if you want to sound cool, you would say, on this trade, hey, I made 8 pips. On that first trade, I lost 4 pips, but, I stayed disciplined. On this trade, I made 8 pips. Exactly. That's all you're doing is you're looking at that 4th entry point or 4th real estate location point, and then that's going to tell you whether pips are going up or down. So it's going to tell you the direction. And then the pip part comes, to what extent, to, what distance are those pips traveling? Well, that's when you count the numbers and do the quick math there, and that's going to tell you how many pips, things made or did not make. Now, here's a little bonus question. What distance did the pipettes measure? Again, what distance did the pipettes measure? So I'll give you a moment to pause. Welcome back. Well, let's first just go through a quick review. What real estate location are the pipettes? If you said they're real estate location number 2, you are wrong. Pipettes are real estate location 1, 2, 3, 4, 5. So 1, 1, 1, 1. I guess this was kind of a trick question. The answer is they did not move at all. The pipettes stayed the same the entire time. They just stayed right there at 1. And that is it as far as pips are concerned. That's what a pip is. That's how you calculate distances of pips. That's how you figure out whether pips have gone up or down. Kind of anticlimactic, for the amount that this term gets used in the world of Forex trading. I mean, you'd almost think that it's some sort of vast, vast concept, but that is all it is. This next topic is very important because perhaps you're very observant and you already kind of like numbers, and not that you have to be some sort of mathematical genius, but maybe you did notice that you're thinking, wait a second, real estate location number 4, that's a whole lot of decimal points. These movements are very, very small, in regards to numerical measurements. How the heck do you even make money on these? I mean, 4 decimal places, in some cases 5 decimal places, that's the movement. That's the, like I said, the measurement that, a pip is measuring and moving. And what? That's so tiny. Correct. Good observation on your part. But this is where trading lots come into play. So let's go into real estate once again, because I think this does a fantastic job of just illustrating what a trading lot is. Let's just start with, though, a real estate lot. Maybe you've bought land before because you want to build on. Maybe you wanted to hunt on the land. Maybe you wanted to, who knows what you wanted to do on the land. Or maybe you've bought a house. And one of the questions you're thinking is, well, can I have some information about the lot? Meaning the real estate lot. Can I have some information about, the land? Or translation, tell me more about the lot. So in real estate, a lot just simply describes, both the shape and size of a unit of land. I mean, right here you have, an aerial view. And as far as this lot is concerned, you now understand both the shape of the lot, which is kind of goofy. And on this picture, of course, it doesn't tell you the size, the area of it, but you get the point. That's what a lot of real estate is. It's just telling you both the shape and size of, this unit of land. Right down here, here's a very easy real estate lot. This is a good old-fashioned square right here. But again, it's telling us, think about it. How did I know that this was a, quote, good old-fashioned square? Well, I was looking at the actual lot itself, which describes and is telling me the shape. And then the size, that would also be included. So that's what a real estate lot is, just simply telling us how something looks in terms of the shape and then the size of the unit of land. Now, a trading lot, we got some reconstruction of this definition to do. So a trading lot describes the size of a unit of land. Or excuse, screwed that one up, Clay. Good job. Let's try that again. A trading lot, when I was putting this together, I'm like, all right, Clay, when you get to that point, be focused because there's a whole lot of words crossed out, and just make sure you deliver, because if not, then this is a waste of time. And I screwed it up. So let me try again. Maybe just like erase that from your memory. So a trading lot describes the size of a unit of currency. So, you don't, obviously these currency lots don't have a shape, right? All you care about is, hey, what is the size of the currency? Or in other words, how much, how big is, the currency, the lot that you're using. So let's venture back into an example. Maybe you remember this from one of the previous videos. It was well, this slide isn't going very good. I can't deliver in terms of speaking the point, and then my annotation tool freaks out again. But like I said, maybe this hopefully sticks out. This was from in a previous example. But at that point, I said, you decide to buy 5,000 units of, euro dollar. Well, in this case, the lingo that you would actually use is, in this case, you're buying a 5,000 lot. Again, 5,000 is just simply telling you the size of the unit of currency that you're getting. And in this case, instead of 5,000 units, you're just getting a 5,000 lot. So that would simply be the trader lingo. Nothing fancy here. Maybe you've already heard of a lot in terms of, stocks or anything else, but that's just what a lot is. It's telling you the size of the unit of currency that you are trading. But this becomes very important as we move forward. Circling back to what we talked about in terms of, those observant mathematical people that thought, wait a second, for real estate locations, these are very, very tiny moves within the exchange rate values. So how do people even make money trading Forex if these moves are so tiny? That is definitely the problem. Well, the solution here is large trading lot sizes. You now know what a lot is. So by making those lots large, you can overcome those small moves, because the trading lots are so big, the small moves actually mean something. So in terms of, some of the standard lots that you're going to see out there in terms of size of lots, standard lot is going to be 100,000 units. Mini lot, 10,000 units. Micro lot, 1,000 units. You're very well probably thinking, wait, what? a standard, like just a normal standard lot is 100,000 units, I do not own a money tree. Neither do I, but take a breath. We got to circle back to the video, to several videos ago, I guess, at this point. Remember the whole topic of conversation we had on both leverage and liquidity? That's why everything is fine. That's why all this is possible. Now, again, there's that overlying context, of you being responsible. Leverage, liquidity. Liquidity is not going to make a difference if you are totally just an irresponsible, degenerate gambler. That doesn't matter. But assuming you are going to take all this serious and assuming you are, not going to treat the Forex market like a casino, then these large lots, it's very possible. It does. Yes, it takes money. I don't want to make it sound like it's easy, but it's not really crazy. I realize that, if you were talking about stocks and somebody's like, and you got to buy 100,000 shares, you would be thinking your jaw would drop. 100,000 shares? I'm not a hedge fund. But in the world of Forex, this becomes manageable because of that leverage. And it's still, yes, it's risky, but it's not risky in the sense of, holy crap, I'm going to crash the market if I try to sell, or if I try to buy, the market's going to explode because no. Because of all that liquidity, remember that $5 trillion number, this is all just very commonplace. It's very normal. I mean, if you go and look at brokers, which we'll see more so in the next video, you'll see that, the leverages that they're offering, and then you start to do a little math here and there. You're thinking, okay, wow, yeah, 10,000 units, that's not a problem. 1,000 units, yeah, that's not a problem. 100,000 units isn't even really that much of a problem. So that is how you overcome this very, very small mathematical movement in pips. You increase the unit size or the trading lot size, and then everything starts, that brings kind of harmony to the world. Now, I'm not going to tell you to stop. I mean, you could stop the video here because, yes, your broker is going to do all this stuff for you, and it's going to have, a dynamic P&L, meaning, hey, you're up X amount on the trade or you're down X amount on the trade, and that's all going to be very fluid. So, like I said before, it's not like you have to have a calculator and think, oh, crap, I'm up. Okay, good. Okay, now I'm losing, and my fingers are getting tired because I have to keep typing on my calculator. No, it doesn't work like that. But this is definitely just an FYI of how, things are working from, just the numerical side of things. So please watch it. But if you don't, like I said, your broker is going to be doing these numbers for you. But in terms of, how much is a pip worth? If you're just curious, well, how much one pip, we already talked about in the examples, one, lost 4 pips, on another one, you made 8 pips. But what does that exactly, translate to in terms of profit? Well, like I said, the math here is easy, and we'll stick with the euro-dollar pair. So the equation for this is very simple. It's the trading lot size times 0.0001. Why do we go 0.0001? Well, if we count, that's the 4th real estate location. And what are we trying to figure out what it's worth? We're trying to figure out what a pip is worth. And if a pip is located at the 4th real estate location, so that's why it's 0001. 3 zeros, and then we get to the location of the pip. So that's that second number there, and that's what's going to tell you how much a pip is worth. So let's assign some numerical values to this. So if you're doing a 10,000 unit trading lot, run the math there, right there, very standard. 10,000 trading lot, you're looking at $1 per pip, either $1 gain per pip or $1 loss per pip. Like I said, 10,000, that's, if you want to just quickly get to, well, for my comfort level, I'd like to make it at $1 per pip. Well, then, the 10,000 unit lot is going to be for you. 50,000 unit lot, again, going through the math, that would be $5 per pip. And this was just totally random, a 200,000 or 276,296 unit trading lot, that is going to be worth $27.63 per pip. Now, it's nice because, okay, this is all, I'm assuming that the majority of us are Americans that are watching this. So for us, it's like, oh, that's nice. The price per pip, the pip worth is measured in US dollars. How convenient. So a quick little note on that. Pip worth is measured in the currency of the of the quote currency, which is second in the list. So again, going back to our, currency pairs and all that, remember, there's 2 things in the list. The pip worth is measured in the currency of that second. So that's why for the euro dollar here, US dollar is listed second. And that's why we can say that it's listed at, American dollars per pip, because the second in the list here is the US dollar. But hey, that brings up, well, wait a second. Not all pairs have the US dollar as the second in the list. So what happens if it's someplace? What happens if it's the first in the list? Then what happens? That's a good question. The math is still easy, but there is just that one extra step involved. So let's take a look at an example of this. This example also leads to a kind of little nook and cranny of the Forex market, like I said, and which is the case. The vast majority of currency pairs, care about location number 4. And I did no research on this, so I don't know the history. I don't know why the yen is what it is. But one exception is that the yen, which is the Japanese currency, they are focused on location number 2. So just kind of an FYI, the yen and any of those pairs more than likely going to be focused on location number 2. So the currency pair we're going to look at here is the US dollar versus the Japanese yen. One thing of observation, the US dollar is no longer in that second spot. It's actually the first currency listed. So now our pip worth is not going to be in US dollars doing the normal math, but that's all right. We can get it there. That's just where that extra step comes into play. So again, the equation here, nothing is different other than right here, we're only going to the second location, 1, 2, because the yen only cares about real estate location number 2. So in order to figure out, the part of our first equation right there, got to get rid of, or we need to get rid of those other zeros, and we'll just come up to real estate location number 2. But the equation other than that's the same. Trading lot size times 0.01 is going to give you, the number of Japanese, what that's worth from the, Japanese perspective. But we don't really care about the Japanese perspective, because assuming we're from, America, then we want to figure out, well, what is it, per dollar? What's a pip worth in our currency? So the first thing, or then after that, I'm trying to, Now, then you divide this, and I'm thinking out loud to talk to myself. No, I don't like how I have this set up. I think it'd be better to first just go through the number, because I think that's going to be a little bit more easy. So let's just go with this assumption, and then we'll kind of circle back here. So the assumption real quick is that the closing exchange rate is $87.94. Closing here, keyword, because when the markets are open, obviously that exchange rate is always going to be fluctuating between the US dollar and the yen. Just up and down, up and down. It's going to be fluctuating. So you got to wait for the closing exchange rate. So in our case, it is, and I just totally made this number up, $87.94. As far as the trading lot is concerned, all this that is occurring is, you as a trader are trading with 75,000 unit lot. So the first step in that equation, this area up here, we need just to figure out the number of yen per pip. So in order to do that, nothing new here. 75,000, which is our lot size, we are multiplying that by 0.01. Again, with the yen, we care about that real estate location number 2. So that gives us 750 per pip. But that's not in our currency, right? So now we got to get that transferred into our currency of, the US dollar or whatever currency you care about. So, whatever it is, this would be the same equation. You would just need to plug in, whatever currency you want to figure out what your pip worth is measured in. We need to hop down to this equation, and that's just simply taking the number of the, the Japanese yen, which we just figured out at 750, and then you divide that by the closing exchange rate, and that's going to give you the pip worth in American dollars. So here we already figured out that number up above, 750 divided by the closing exchange rate, which I just made up, is going to be $87.94. So that tells us that in this case, it is now $8.53 per pip, and that would be, the pip worth in US dollars. So again, I realize that's a hassle, but the brokers, you don't have to sit here, doing all this stuff. The brokers are efficient. They're going to be doing calculations for you. But again, this is all just kind of an FYI in terms of, what the pip worth is, worth, how you can transfer it between different, currencies and all that sort of stuff. So again, I realize that maybe not, if you purchase the course and you're, one of our friendly neighbors up north in Canada, that you're going to be caring about, well, what about Canadian dollars? So you're going to have to do these exchange rates from a little bit different perspective, but the math is the same. It's just a matter of what numbers are you actually plugging in. And the other nice thing here is that, a quick Google search, it brings up all sorts of different calculators. So if your broker, for some reason, is not doing any of this, which I don't know why would be the case, like I said, calculators all over the place. Just type in pip calculator, exchange rate calculator, all that. change it up, and there's going to be a million different calculators that pop up that'll, do all these numbers for you. So it's not like you're gonna have to get out here with pencil and paper and crunch through any of this. It's just, again, more of that FYI perspective of things. So that wraps up kind of the meat and potatoes. Next video we're gonna go over is, brokers, and most importantly, certain attributes that you need to pay attention to within brokers, and how that's going to help lead you to selecting the right broker for whatever your trading and trading strategy is going to be.